Hello everyone, welcome back. I'm Sreelakshmi and we are going to continue with part 2. So in this part we will be focusing on SE 200. But before that let me give you a series wise SE detail. Okay, so as we have told in earlier session, the standards of auditing range from SE 200 to 899 and we can segregate into different series. Okay, so 200 series, which means from 200 to 299, deals with basic responsibilities and principles. 300 to 499, audit planning and risk assessment. 500 series deals with audit evidences. 600 series deals with using the work of others. 700 series deals with audit conclusion and general reporting. And 800 deals with specific reporting. Okay, so 800 is for specific reporting and this is for general reporting. Okay, just keep in mind. So we will be focusing on this series for the time being. And in this chapter in particular, we are going to deal with SE 200. Why are we having standards? Because the auditor has to comply these standards and achieve the objective of the standard. So every standard has objective, right? And mostly scope will be also described in the standard, like how much it covers or what all aspect does that standard covers. Similarly, some specific requirements pertaining to that standard shall also be there. For different standard, the requirements is different, right? In the standard, we will be dealing with, okay, before that, what's the name of the standard? Overall objectives of the independent auditor. What auditor? Independent auditor, and the conduct of an audit in accordance with standards on auditing. This is the name of the standard. As we have told earlier, most of the standard will be having what? An aim or objective. This is what the auditors intend to achieve. Okay, objective of the standard. Then we will deal with scope. Then we will have requirements. Then we will discuss on compliances with essays. Okay. Then we will talk about inherent limitations of audit. Now, what is the objective of the standard? In conducting audit of financial statements, objective of auditor in accordance with SA 200, overall objectives of the independent auditor and the conduct of an audit in accordance with standards on auditing are. So what is the first objective? To obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, thereby enabling an auditor to express an opinion on whether the financial statements are prepared in all material respects in accordance with an applicable financial reporting framework. So basically we have given or we have discussed already about this particular portion, right? But except a few, we have to discuss some more in detail. So what the auditor is intent to do? He has to get a reasonable assurance, right? So how does he get that assurance? By performing audit procedure and obtaining the sufficient appropriate audit evidence. Whether the auditor is giving opinion on every transaction or everything that is on the financial statement, no, but only on a totality. Okay, that is what is meant by FS as a whole. So, okay, whether the financial statement as a whole means in total are free from material misstatement. Okay, what is this term material? Two times this particular term has occurred. Material means something that is of significance, something that is important. So for immaterial part, the auditor does not take any responsibility. So auditor is giving opinion on FS, whether the FS, okay, as a whole are free from material misstatement. Misstatement means something that is incorrect, right? If an FS is misstated, which means that FS is incorrect, does the auditor has to take the responsibility? No, auditor is not responsible for misstatements that has occurred, which are immaterial. Auditor is only responsible for material misstatement because he is only taking consideration of the misstatement which are relevant to the financial statement, which are important to the financial statement. And he is giving opinion only on those material things or important things. Say, for example, for the company XYZ, the auditor has set a threshold limit of 50,000 rupees. Okay. So this is the materiality level. This is the materiality level or materiality limit or materiality threshold. Okay. So anything that crosses this amount requires auditor's attention. Say, let's take the first case. When he was auditing, he understood that the accountant, by mistake, has entered 1,200 as office expenditure instead of 2,100, which means there is an understatement of expenditure for 900 rupees, right? This was unintentional. This was by mistake. Okay, he didn't do it intentionally. So we can say that the misstated amount is due to error. So the misstatement is caused due to error because it is unintentional, right? But is this material? Is this misstatement material? No. Why? Because it has not crossed the threshold limit of 50,000, right? So this is an immaterial error. Now let's take the case 2. Same, okay? Office expenditure. So the amount, let's add 2 more zeros. Now what's the difference? 90,000, right? So this is error, yes. He didn't do it intentionally. But is this material? Yes. Why? Because it has exceeded the threshold of 50,000. So this is a material error. Now, let's take the third case, where we'll say a CF of the company have faked an invoice, okay, and he faked a profit of 20,000 rupees. So there is an overstatement of 20,000 rupees, but he did it intentionally, right? So he did it intentionally means this is fraud, okay, he had done fraud. And is this amount material? In terms of quantitative threshold, 20,000 is immaterial amount. So in terms of quantitative manner, we can say that this is an immaterial fraud. But let's take the fourth case where the CFO has forged invoices, faked the profit of 20,000. Let this be happen 6 times. Okay, then what's the material effect? 1,20,000 will be the faked profit, right? So he has created fraud. And this amount 1,20,000 has exceeded this limit 50,000, right? So this is material. So this is a material fraud. So whether due to fraud or whether due to error, the material things, the case 2 and case 4 are very important. The FS shall not be misstated materially. Thus, we can say that the auditor has to obtain reasonable assurance about whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion on whether the financial statements are prepared in all material respects, in all significant aspects, in accordance with the applicable financial reporting framework, and to report on the financial statements and communicate as required by the essays in accordance with the auditor's findings. To report is through the audit report, right? And communicate as required by the essays. So essays requires for the auditor to whom they should communicate, and this is as per their findings. Now coming to scope of the standard. So the standard deals with overall responsibilities, which means the general responsibilities of the auditor. And essays are applicable for audits, which means that essays are applicable for historical financial information. And they do not impose responsibilities on management or TWG. Why? Because who has to achieve the objective of the standard? Auditor, right? Auditor has to achieve the objectives of the standard through various procedures as prescribed in the standard. Does it impose any responsibility on management or those charged with governance? No. Management and those charged with governance, the TCWG, will have many responsibilities. Okay, SCs do not intend to override them. So no responsibilities on management of TCWG from SC's perspective. Okay, they have other responsibilities. The SCs or the standards on auditing is for auditors. Materiality. As we have discussed in the example, there is materiality. So this can be in the planning level and performance level as well. So this materiality is something that requires auditor's attention. Those that are immaterial, whether the auditor has to pay attention, no. Suppose the company XYZ is audited by us as auditors. Then we give a clean report because we see that the FS is very clear in all material respects. FS is prepared as per the applicable financial reporting framework, and there is nothing that comes to our attention that deteriorates the preparation of FS or that make us skeptical that there is something fraud in the company or there is something error which is material. So we give a clean report, right? But later, it was found by the management that a fraud has occurred in the company by the CFO for 500 rupees. Okay, 50,000 was our threshold for 500 rupees. Can the auditor be held responsible because he didn't find that? No, because the amount was not material, right? And also he has done all the things that he could do from a professional manner. Okay, then he can't be held responsible. So for materiality, there can be planning materiality and performance materiality. The auditor shall not be held responsible for immaterial things. Okay, or immaterial misstatements in financial statement, auditor shall not be held responsible if he has given a clean opinion. Auditor to exercise professional judgment and maintain professional skepticism. We will talk about this in this session itself, okay, later. Now, form of opinion. The opinion given depends upon the AFRF and the law and regulation. Okay, what is ruling them or what is ruling the entity? Accordingly, the auditor will evaluate if the entity is required to prepare as per Ind AS, but they have prepared as per the accounting standards. Then what happens? It's a different perspective, right? The AFRF should have been in Ind AS, but the entity prepared as per accounting standard. So they have not done it correctly, right? So the opinion will also differ. Similarly, law and regulation. So as per Companies Act, they have given correct. So the form of opinion depends upon these. The auditor to communicate other communication and reporting responsibilities. Auditor has other communication and reporting responsibilities. Okay, say for example, NOCLA. Okay, NOCLA means non-compliances of laws and regulations, which means that the auditor shall respond appropriately for any non-compliances which are very material. Okay, there is a particular threshold as per NOCLA, and if such things happen and you as an auditor has to respond appropriately, then you should respond. This is one such reporting responsibility, because not only as per the standards in auditing the auditor has to respond, there are other requirements or responsibilities imposed on the auditor apart from standards. So one such example is NOCLA. Now let's move on to the third portion. Okay, I think you remember what we have started from the beginning, right? So what are the things that we are going to discuss in the standard? Objective, we discussed. Then regarding scope, yes, we discussed. Now we are going to the requirements part. So what are the requirements or that the auditor should satisfy? Okay, auditor should always maintain ethical requirement. Okay, should always comply with the ethical requirements. Then professional skepticism shall be maintained. Then professional judgment, exercise professional judgment. Then comes sufficient appropriate audit evidence. Integrity. Integrity means what? Being honest. The auditor is expected to be honest. The auditor is expected to keep integrity. Say, for example, when you are auditing, you come across a fraud transaction and you understood that a friend of you has committed it, or a sister, or your sibling, or any relative of you, or has committed that particular transaction. Are you expected to conceal that because it's because you know that person? No, you should be honest in your profession. Okay, so integrity should be maintained. You should not conceal that particular fact. You may be having reporting responsibilities and you should do it honestly. Now, the next ethical requirement is objectivity. Objective means free of judgments. So, free from bias. If the client is giving too much money or they are giving a hike in the fees because they wanted a clean report, a clean audit report from you. So they're giving more money because they wanted to influence you. So such things should not happen. And you should be objective. You should give opinion objectively. That is objectivity. So the auditor should comply with integrity, objectivity, then comes confidentiality. During audit, you will be knowing so many informations from the client. Client discloses so many information, right? So that are in the public domain or that is disclosed to the public. But apart from that, because you are working in it, right? You are inside the framework of the entity. Then you will be knowing more information apart from what is disclosed publicly. So you may be knowing so many information like upcoming projects or all those transactions, related party transactions, their IPR, etc. You may be knowing. So everything know about the client, it should be kept confidential. You should not disclose to anyone. Okay, so you should keep it confidential at all times. It should be maintained confidentially. So confidentiality shall be exercised. The engagement that you have worked may have been over by now, but still you should not disclose those information that you know earlier. Okay, unless it is required by the lower regulation, you should not disclose. That is being meant by being confidential. So integrity should be maintained, objectivity should be maintained, confidentiality should be maintained. Now, the next ethical requirement is professional competence and due care. Okay, you may be having so many knowledge, you may be having so many experiences in your field, but at all times you should update your skill. Both professional standards and technical standards you should be knowing at the application level also. Okay, so you should be competent and you should take due care in your profession. And the next ethical requirement is professional behavior. Okay, at all times, no, anything that discredits your profession should be avoided. Okay, you should behave professionally means that what you should not discredit your profession in any way. So you should maintain professional behavior at all times. So these are the ethical requirements and the auditor shall maintain all these ethical requirements, shall comply with all these ethical requirements. Now the next requirement is professional skepticism. Skepticism means what? Skeptical, doubtful. You're having some doubt. Being skeptical means you're having a questioning mind. Okay, that should be professionally. Not for each and every transaction you are going to annoy the client by question. No, that's not the case being professional. For exceptions or because of the evidence that you have gained from the audit work, you may be critically assessing it and asking the question. Or you may be knowing some cases, no, where you will think that or you will have an indication that there is a potential misstatement. So those things are those that requires the auditor's attention and you will be asking such questions to the client. So being skeptical is a very good quality and a requirement for the auditor. And it's not like each and every transaction you are questioning. Only those that requires importance or only those that are requiring a critical assessment. Okay, those questions that after critical assessment, okay, these are to be analyzed carefully. So that's called as professional skepticism. Now coming to professional judgment. You are having so many knowledge. Okay, you may be having some judgment. Those judgments shall be professional, which means that there are some prejudicial judgments, no, that is not professional in nature. These judgments should be from a knowledge perspective or from what can I say, from you are a trained profession, or so such judgment shall be there. Not for each and everything you are judging it. Okay, don't be judgmental, but professionally you are having some judgments that shall be maintained. That is a requirement also. Now, this is sufficient, appropriate audit evidence and audit risk. Okay, this is audit risk. Okay, not audit report. Audit risk. What's the objective of the standard? To obtain a reasonable assurance. Okay, how is it obtained? Through audit procedure, and the evidences shall be sufficient and it shall be appropriate. And what about audit risk? You are giving an opinion. If your opinion is inappropriate, which means the opinion is incorrect, that is the audit risk. Okay, the audit risk should be reduced to an acceptable level, which means that there is a very lower or very narrower chance that your opinion is going to be incorrect, because you are performing the procedure as per the essay, you are achieving the objective of the standard, which means you are gaining sufficient appropriate audit evidence. So will your opinion be incorrect? No. What are the chances of the audit risk? You should reduce it to acceptable lower level. So the audit risk shall be reduced to an acceptable lower level, lowest level. Now moving on to compliance with essays. Comply with essay means what? Complying with all the auditing standards. Okay, for audit, auditing standards has to be complied. And what do I mean by comply all relevant essays? Say, for example, the company doesn't have any related party transaction. Okay, there is no related party transaction in the company. Actually, this SA 550, no, it applies to the related parties. Okay, related party transaction. If that particular company is not having any related party transaction, means that this essay is not applicable to the company, right? So only those that are relevant applies. Now, understanding of all essays. The auditor should have an understanding of all the essays, okay, regarding the concept, the text, application level, everything should be known to the auditor. Now, regarding department from a requirement. Suppose, for a particular essay, a particular objective is to be achieved, and there is a procedure also for the same. But that procedure cannot be performed by the auditor, which means that he has to evaluate whether there is another procedure in replace of it, whether there is another alternative procedure in place of it. And if he is performing that particular alternate procedure, no, whether that particular objective is to be achieved, whether that particular objective can be achieved through the procedure, that should be evaluated. If that is to be achieved or that can be achieved, it means that the standard permits it. Okay, because the objective of the standard is achieved through another procedure, which is an alternative procedure. In whatever ways, no, the objective of the standard should be achieved by the auditor, and the standard permits alternative procedure. So there can be a departure from a specific requirement. So perform alternate procedure. To achieve dash of essay. What should be achieved? Objective, or the aim of the essay should be achieved. Now, what is the next point regarding compliance with essay? If an dash cannot be achieved, whether to. Okay, there are two another blanks. What do you mean by that is that? If an objective cannot be achieved, we have told that if there is an alternative procedure, the auditor shall perform it. However, objective of the standard should be achieved. If an objective, there are so many objectives, say A, B, C, D in one particular standard. C cannot be achieved. Okay. So if one objective cannot be achieved, or say he has to either modify the opinion, which means the audit report he is going to give shall have some qualifications, or it is not going to be a clean report. Or the other option is that he has to withdraw from the engagement. He should not be there for the audit engagement. He should withdraw because the objective of the standard cannot be achieved. So whether to modify opinion or whether to withdraw from the engagement. Now, the last part of the standard, which is inherent limitations of audit. Auditor cannot reduce to zero. Auditor cannot obtain dash assurance. Auditor cannot give dash opinion. You have to fill in the blanks. Think for a minute. Okay, find these blanks. The audit risk, no, it cannot be zero. That is, you can't say your opinion is going to be 100% correct. Okay, your opinion on the financial statement is going to be 100% correct. You can't say. As we have discussed earlier, we are only able to give a reasonable assurance, right? So, can you give absolute assurance? No. Because the auditor cannot obtain absolute assurance. And the audit opinion you are going to give is persuasive. You are not going to give something called as conclusive opinion. You can't say this is the conclusion and this is going to be perfect because you have some limitations regarding the time, cost, etc. So within the time frame, whatever you could audit, whatever that is material, that is covered. So there are inherent limitations to audit. You can't say because we are auditing, we are doing all the procedures, we can't say the risk is zero. The audit risk is going to be zero. No, there can be a chance because no, some fraud in the company that has taken place may be concealed in a high level where even the auditor, even after procedure, may be going another technical training or maybe taking the knowledge or influence from another professionals, or you may be using information technology into it. So many things you may be using it, but still it is concealed in a very high level, very confidential level that you are unable to detect that particular fraud, which means that there is an audit risk. There is a chance that the FS is misstated and you didn't trace it. There is always at least a 1% chance. So you can't say that because you're auditing, the risk is going to be zero. No, it can't be that. Auditor cannot obtain absolute assurance. As we have told, you can't sit and audit every transaction. Okay, lakhs of transaction if you're going to audit, when will the audit be completed? There is a constraint to time as well. Auditor cannot give conclusive opinion. You can't say this is the conclusion and this is absolute conclusion. No, you are rather giving a persuasive opinion. So you cannot give conclusive opinion. So for audit risk, no, you can make it to an acceptable level and the auditor can obtain reasonable assurance. The auditor can give persuasive opinion. Now, why are we having such inherent limitations? Okay, there are four reasons which we will discuss. First one is the nature of financial reporting. Second is the nature of audit procedure. Third is the timeliness of audit and the balance between cost and benefit. And there is another reason. Okay, so nature of financial reporting. Okay, who is doing this financial reporting? Who's preparing this FS? By management. Okay, so management is preparing the FS and they may be having or they may be taking lot of decisions in preparation of FS or in selection of an accounting policy. Say for example, accounting estimate. Okay, this is an example. Okay, they have given or they have provided for warranty. So the provision of warranty in FS is 5 lakh. Okay, they have kept a provision of 5 lakhs. Can you say that this 5 lakh is going to happen? Can you give 100% assurance because you are performing so much audit procedure on this FS? No, we can't say that because this is subjective. Management is doing this provisioning based on their estimate. They're based on their subjective decision. Future can be uncertain. So we can't say that this is going to be 100% accurate. So this is a limitation to the audit. Because of the nature of financial reporting, auditor is not able to say that the audit procedure yield in audit findings is going to be 100% correct. So there is limitation because of the nature of financial reporting, and one such example is accounting estimate, say provisioning for warranty. Because for example, in this accounting year, we have kept a provision for the next year as 5 lakh. But in actual, what incurred is 8 lakhs. Is the auditor able to predict this 8 lakh? No. Neither the management, neither the auditor was able to predict this 8 lakh because this has happened in actual. Okay. So the forecast is not always the actual. So the nature of financial reporting is what inherent limitations to audit. Next is nature of audit procedure. We are doing so many audit procedure. One such procedure is inquiry. We may be asking to the management, to the employees there, so many questions, right? But can we say that whatever they are giving is true or whatever they are giving as information is complete? No, we can't say that. Okay, it depends upon the person to person also. So there is limitation to the procedure. So completeness of information can't be fully satisfied by the auditor. Now regarding fraud, okay, there may be many fraud transactions in the company. We may be able to detect it. So many transactions which are material to the FS. Some which are immaterial may not be traced from our perspective. And also, you have to remember this. Fraud is done if it's done by senior management. It is not going to be an easily detectable way. Or a fraud that is occurred in the company. Sophisticated schemes or very well organized scheme in such a way that nobody is able to detect it. Such types of fraud has occurred in the company. Through the procedure, we are able to find almost everything, yes, but can you say 100% we have traced everything? No, still there is a susceptibility that something is not traced. Okay, so due to the nature of audit procedure also, we can say that it is a limitation to the audit. Another example I can give you regarding the audit procedure. Yeah, we have told about investigation. We have discussed about investigation in which part? In the scope of audit. We have told that it is excluded from the scope of audit. There is a alleged fraud in the company or alleged wrongdoing in the company. Are we given the power to search? No, we can't because we are not investigators. So we have the limitations from the audit perspective. So we are not able to, and we can't do that part. So there is inherent limitations to audit that particular alleged wrongdoing cannot be investigated by us. So due to nature of financial reporting, yes, there is inherent limitation. Similarly, nature of audit procedure also creates some inherent limitations to audit. Now regarding the timelines of audit, the users know they expect us to complete the our audit within a particular time frame. So we can't extend beyond that. So there is a limitation to the time as a whole. So we will be able to complete those that are relevant. As we have told earlier, we are not going to evaluate or sit and evaluate or audit each and every transaction. Those that are material are material are those which we pay attention to, right? And there should be balance between the cost and benefit. Okay, we may be incurring many costs, management may be incurring many costs, and the benefit attached to it also plays an important aspect in the audit. This means that it is impracticable to address each and every transaction or impracticable to address each and every information. So regarding the timelines of audit, And also because of the cost and benefit, there is inherent limitations to audit. Now, others. Regarding others, let's first discuss about law and regulation. Okay, laws and regulations. There can be non-compliances to laws and regulations, and there is another chance of, what can I say? Yes, going concern. We are going to, or we have done, or we have performed the audit keeping a going concern perspective, which means we expect that in the next foreseeable future the entity will continue. But a catastrophic destruction has occurred. Is the auditor able to recognize such future events? No, because future events are unpredictable. So that is also a limitation to audit. Now, collusion. Some employees know they may be carefully doing frauds in the company, and maybe at the very senior management level they may be doing it. Okay, such things the auditor may not be able to. And also maybe let's say about related party transactions. The entity is expected to provide complete information regarding the related party transactions and events. But can we say that they have given all the information? No, because of this time constraint, cost and benefit, and maybe from their perspective as well, they may not be given sufficient, appropriate or full or complete information to the auditor. So some informations may be concealed. So we can't judge the related party transactions in full also. Even though they have given complete information, they are saying it, we can't say that it is 100% correct, or we can't say that they have given it in full. So these are the inherent limitations of audit. Now let's wind up SA 200. Okay, so in SA 200, we understood that it is regarding the overall objectives of the independent auditor and the conduct of an audit in accordance with standards of auditing. The SA aim to obtain reasonable assurance whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, and also checking in all material respect whether it is prepared as per the applicable financial reporting framework, and also providing a report, right, to report on the financial statement and communicate as required by SAs in accordance with the auditor's findings. Now regarding the scope of SA, it is regarding the overall responsibilities of auditor, and audit applies which means the standards of audit applies to audit, which means to the historical financial information, and it does not cast any responsibility to the management or TSWG, and those that are material are for the auditor, which means for immaterial things auditor is not to be held responsible. Then what we have told, depending upon the AFRF and law and regulation, the form of opinion will be different. And apart from SAs, auditor may be having other reporting responsibilities. So these are the scope of what is discussed under the scope part. Now regarding the requirements. Okay, requirements. What are the requirements? Ethical requirements, professional skepticism, professional judgment, sufficient appropriate audit evidence and audit risk. Regarding ethical requirement, the auditor shall comply with all ethical requirements: integrity, objectivity, confidentiality, professional competence and due care, then professional behavior. And the auditor has to obtain sufficient appropriate audit evidence. He should maintain professional skepticism and professional judgment at all times, and the audit risk shall be to an acceptable lower level. Okay. Then compliances with SAs. So those that are relevant to that particular entity are those standards which the auditor has to comply with. Say for example, when we have discussed about related party, we have said that SA 550 is not applicable if related party transactions are not in the entity. And the auditor's aim is to achieve the objective of the standard. If a particular procedure cannot be done, then auditor shall perform another procedure in place of it, which means an alternative procedure is done. But however, he has to obtain or he has to achieve the objective of the standard. If an objective cannot be achieved, then he has to evaluate the objective as an auditor whether he is able to achieve. He has to modify or he may be able to he has to withdraw from the audit engagement. Then we have discussed two inherent limitations of audit, which means that because of audit, we can't say everything is clean and perfect. There are some limitations to audit. Auditor cannot reduce the audit risk to zero. Auditor cannot obtain absolute assurance. Auditor cannot give conclusive opinion. What are the reasons? Why are the inherent limitations? Because of the nature of financial reporting, because of nature of audit procedure, timelines of audit, and balance between cost and benefit, and there are other reasons. So thank you friends. Hope you enjoy learning. Bye. Take care.